Pub. And I'll tell you the truth, today was not supposed to be about tariffs originally. When Nate and I first started talking about hosting a monthly roundtable on the first Saturday of the month, we've talked about that for a while now. And it was really planned to be a very laid back, more actionable kind of game plan session for the month ahead, which we'll get to some of that today. And we'll get back to that plan in the months ahead. If you like that idea, definitely let us know. It's something we want to do and keep doing, but I decided that the timing for today's session was just too critical to ignore. I'm sure you don't need me to tell you this, but the markets are in rough shape after Wednesday. On Wednesday, President Trump announced his sweeping tariff policies on what he called Liberation Day, and the markets reacted swiftly and violently. Let's just take a sampling of some of the headlines we've seen coming out this week. JP Morgan upped the likelihood of a recession kicking off before the end of the year to 60%, so more than a coin flip. The NASDAQ 100 officially entered bear market territory on Friday. Later in the day, we officially reached 10 trillion erased from the stock market since January 20th, the day that Trump took office. And it became the first time in history that the Dow Jones dropped more than 1,500 points on back-to-back days. Of course, some of that has to do with the Dow Jones being, healthier than it's been in the past and having a lot further to fall. 1,500 points being a smaller, relative percentage over time. But there's no reason to belabor the point, right? This is one of the worst two-day market stretches that most of us can remember. And if you're here, I'm confident of two things. You probably lost some money in the markets the last few days. We all have, if we've had any money in there, no avoiding that reality. And you probably have a lot of questions. So that's why I've assembled this roundtable today to answer those questions and bring a team of our top experts to join us live for this session. They're going to give you their thoughts on the market, on Trump's tariffs, and where we're heading next. And most importantly, they're going to share what they are doing and recommending with their own real money right now, right? You want to know what the experts are doing themselves. You don't want kind of cookie cutter advice. You want to hear what they're doing when they have actual skin in the game. So let's talk about who's joining us today, because I don't think we could have three better guys to walk you through this. We've got Kane Shieh, who is a former PIMCO VP portfolio manager. So he has the bona fides of being really in the markets at a very high level and managing through crashes in the past, including the $1.7 trillion in assets he helped manage, including for companies like Disney and Apple and Google and more. He traded $200 billion in daily volume on average. He's traded with legends like the bond king Bill Gross and Allianz chief economic advisor Mohamed El-Erian, and he discovered the incredible gamma pockets hidden inside many of the most popular stocks, which is what brought him back to us and made him a part of our team. Jack Carter, of course, you may know him as the income ace. He's been in the markets for nearly 40 years. He trained on Wall Street at Dean Witter. And he managed his own funds so successfully that it never saw a losing month on record. Jack has traded through all kinds of recessions, all kinds of crashes, and he is going to help us out here with his unique perspective on the market. And then joining a roundtable for the first time, at least as long as I've been hosting them, we've got a good friend of mine and a legendary trader, Tom Busby, who's been trading since the 1970s. So he's traded through every crash I can name, the dot-com crash, the housing crisis, and of course, he's very open and honest about his experience on Black Monday in 1987, which he's going to talk to us about here today. He's the author of The Markets Never Sleep, Trade to Win, and Winning the Day Trading Game, three really awesome books you should check out. I know there are some digital copies floating around too. He's a former vice president of Smith Barney, which since became Morgan Stanley, and he's one of the first 50 traders in the world to get a Globex terminal for home use. He's a former member of the Chicago Mercantile Exchange, of course, and the founder of DTI. So those three guys have tons of experience, tons of valuable insights to offer, and I'm really excited that they're joining us here today. Now, to me, we got a massive update late in the day yesterday from the president himself, and I wanted to make sure this was on everyone's radar, but let me rewind a bit. For a while, there have been basically, I would say, two schools of thought on Trump and his tariff policies. The first school, which, to be honest, I was a part of for most of the time, insisted that tariffs weren't a huge concern because even if the markets did enter into this kind of crisis sell-off territory, uh, Trump would see that and he wouldn't have the, kind of backbone. That's not meant to be an insult to him, but just the political, he wouldn't have the political stomach for watching the markets fall. That would be kind of his leading indicator, and he'd adjust his strategy to save face. Like I said, that's the camp I was in for a long time. And I want to get stressed here. This is not meant to be a political, discussion one way or the other. It's just trying to understand what the reality here is for the markets. After one of the worst 2-day periods in the markets, and Trump is, kind of calmly golfing in Mar-a-Lago, that seems less likely, which brings us to school of thought number two. School of thought number two argued that Trump would intentionally crash the markets in order to push interest rates down, let the Fed refinance debts, weaken the dollar, and lower housing costs, and various other things you could do with a weaker dollar and lower interest rates. This school of thought basically held that Trump had bigger plans in mind, including a major restructuring of the American economy. And the Steelman version of this argument would say that the Trump, White House would accept the short-term pain for a hugely different long-term future for America. And agree or disagree with that argument, and its goals, it's harder to deny that that's what he's doing when President Trump shared this video to Truth Social saying that that's exactly what he's doing. Basically, the video said he's purposely crashing the market and it's a brilliant idea. And, Warren Buffett said it was a great plan and some other things. So again, you can disagree or agree with that as a matter of policy, but he did share it, which certainly suggests he believes it, because even if he was tweeting it a little quickly, that first slide is hard to ignore. And the video basically goes on to describe Trump's Robin Hood-esque plan of taking a little money out of the markets, from the high net worth investors that make up a little of the market or a lot of the market, and injecting it back into the middle and lower classes. And, yesterday, Trump's push to demand lower interest rates from Jerome Powell certainly reinforced that potential agenda. So now we've got this, new reality where it's a question of how long do the tariffs last? What is the ultimate end goal? How much is Trump going to allow countries to negotiate down their tariffs versus, he's really believes in keeping them on for the long term, and how much does the market need to go down to before it has quote unquote priced in those tariffs? There's a lot of questions, and we're going to get to a lot of those with our experts here in just a few minutes. There's one more thing I wanted to read through with you because I just thought it had a lot of fascinating data, and it's this thread from the Kobasi letter. Let me try and get this up so you can see it with my fancy little screen share here. Not in any way related to the Kobasi letter, but I just think they have a lot of really valuable research. So I wanted to read through this. They said it's official. The NASDAQ 100 is in a bear market following a 6% drop today being Friday, the largest drop since March 2020. U.S. stocks have now erased a massive $11 trillion since February 19th, with recession odds above 60%. What does it all mean? Let us explain. As of today's close, again, Friday's close, we now have multiple major market indices in bear market territory, including the NASDAQ 100, Russell 2000, Nikkei 225, and Magnificent 7. The S&P 500 fell over 10% in 2 days for the seventh time in history. This was last seen in 2020, 2008, and 1997, most of those rough years for the stock market overall. President Trump's reciprocal tariffs on Wednesday were historic. The effective U.S. trade rate is now above 25% for the first time since 1900. We are above levels seen in the Smoot-Hawley Tariffs Act of the 1930s. If these tariffs persist, a recession is impossible to avoid. Anyone who knows the Smoot-Hawley Tariff Act, or has seen Ferris Bueller's Day Off for that matter, knows that those were, at least linked by many to the Great Depression at the time. The last time we saw such a sudden hike in tariff was the 1930 Smoot-Hawley Tariff Act. As shown below, this was a major catalyst of the Great Depression. The S&P 500 fell 86% in the Depression. While that is not what we're calling for, tariffs do spook investors. Here's a timeline of events since Liberation Day on April 2nd. The sell-off began when reciprocal tariffs were not limited to 10%. Today marked a clear escalation as China announced 34% tariffs on the US. Then Fed Chair Jerome Powell said he's not in a hurry to cut rates. Let me show you this chart a little bigger. Sorry, I should have shared the whole screen and made this a little easier on us, but here we go. This is the chart they're talking about, and it's a minute chart of the S&P over the last few days. Liberation Day begins here, and then futures start to rally. The S&P erases $2 trillion in 20 minutes after Trump announces the tariffs. Then the sell-off gains momentum as retaliation begins. China announces the tariffs here. Powell's not in a hurry here, and the $4 trillion in 1 week at the end of the week. So a lot going on in just a matter of days, and we can see the play-by-play there as we go through it all. I can't get this to cooperate. There we go. Heading into the close on April 2nd, they posted the alert on shorts on the S&P. That worked out great. More of an ad there. According to JP Morgan, retail investors bought 4.7 billion in stocks on Thursday after the drop. This is, potentially a good sign. This was the highest amount of net buying by retail in 10 years. Simultaneously, hedge funds sold the most stocks since 2010 on Thursday. So retail has been trapped a little bit by buying the dip. Today's drop officially puts the Magnificent 7 index down 29% from its all-time high, and that puts the Mag 7 at their lowest level since the August 5th yen carry trade collapse. Most investors are down more than the S&P 500's 3.5%, 13.5% year-to-date decline because tech was so popular. Interestingly, Bitcoin performed exceptionally well on Friday. In fact, the Bitcoin to Magnificent 7 ratio just hit its highest level on record. While risky assets collapsed, Bitcoin closed the day up 1%. This was the first time Bitcoin has deviated from risky assets in 2025. So some good news for Bitcoin investors. Wednesday tariffs are roughly 1.6% of US GDP, or 50 basis points more than the previous record in 1968. We see GDP contracting between 3 and 4% if these tariffs remain long-term. PCE inflation should rise towards 4% over the coming months as price increases begin. As we look ahead, we expect severe volatility to continue next week. Investor sentiment is now at its most polarized level since the pandemic. The share of investors expressing bearish sentiment over the next 6 months in the AII survey hit 61.9%, the most since March 2009. So some good news in there, a lot of kind of worrying news, a lot of reasons that people are not optimistic. But the thing that is important to emphasize is that even in bear markets, even in volatile markets, there is always a way to, trade with an educated strategy. There's a way to put your money somewhere safe and do different things to protect yourself. And that's a lot of what our experts are going to be talking about here today. So this week wasn't fun at all, but it's a fascinating time to study the markets. So where does it all leave us? And where does the market find a bottom or some sure footing again? I'm going to be asking our experts that in just a moment. But first, I have some questions for all of you. Let's hear you in the chat. Let us know your name, where you're coming from, any thoughts and questions you have about the tariff, the economy, where we're at, how you're doing in the markets. We'd just love to know, it's been rough for everybody, but, are you hanging in there? Are you trying to stay out? What's your mindset right now? And most importantly, start sending your questions for our experts. I've left a ton of extra time in the flow today for Q&A because we know you'll have a ton of questions. So keep those coming. Deanna's in the chat, able to help us get those questions pulled while I focus on chatting with our experts, and then we'll have that Q&A at the end. We're officially kicking off at 11, which is 4 minutes from now. So welcome to the Tariff Roundtable. I wish we didn't have to have this after such a significant market downturn, but we're glad that you're here. And I'm very excited to have Kane, Jack, and Tom here in just a few minutes. Let me pull up the chat and get it out of all of your faces. I got a bunch of folks saying hello here. Hank, excuse me, in Tennessee. China responded to the tariffs too. Yes, they did. That was a big part of why the markets sank even lower yesterday. David from Wyoming, hello. Tony says he's from outside Philadelphia. Roundtables have provided interesting, diverse views on the markets and opportunities. Thank you, Tony. Really appreciate that. Love hearing that these are valuable for people. He also says, in case you missed it, Peter Navarro on Smirkonis this morning touted a 50,000 Dow by the end of Trump's term. That's not surprising, I guess. We'll see if that happens. But it would be a pretty big increase from where it was when he took over, although maybe not as big as, some would have hoped, but we'll see. That's a 12,000 point move from where we're at right now. Certainly Peter Navarro, for those who don't know, is I would say arguably the biggest hawk on the tariff side. So certainly one of the driving forces behind this news. Pete from the Netherlands, welcome in, Pete. I see you at a ton of webinars, so thank you for being here. Sam's here as well. He says the amount of money in the greatly widened economic system is totally different. I'm assuming that's referring back to the tariffs at Smoot-Hawley I was talking about, and that's definitely true. Brent, the recording is going to be on YouTube, and it will be, I think it should post immediately after we're done because we are live streaming there, so should be available. And yeah, Sam, same answer. The recording definitely will be available. Cheryl, hello. Patrick, down a bunch in 9 days. I'm sorry to hear that, but hopefully we can come up with some ideas to help turn the tide there. Henry says he's hanging in there even with some losses. Glad to hear that. Pete says, what's the best strategy? We're going to get into that with the gurus. Joy, welcome in. Maria, Brent, Patrick, hoping Jack can get me back in the black. Nice. Love the rhyme, and he's very good at that, so hopefully he will. We've got Pearl and Pat and a bunch of people tuning in. Robert, we've got some good questions coming in too. I'm tracking a lot of these, so thank you all for being here. Ian is sitting in a money market. Welcome in. Glad that you're here as well. And yeah, it is 10:58, so we're about to get started. Brian says he's doing mostly day trades now, and has a question for our experts that we'll get to. And yeah, we'll talk a lot about all those questions as well. So we're going to get to that in just a few minutes. It's time to almost kick this off. Let me pull up my what's the word I'm looking for, agenda here before we get too deep into it so I don't lose my place. Someone asked for the YouTube link, if you don't mind sharing that, Deanna, in the chat. Might be easier for some folks to stream over there as well. Yeah, thank you all for being here. Thank you for your questions in the chat. Thank you for making time for us on a Saturday morning. And like I said at the beginning, just to kind of remind everybody, our plan is to do this every first Saturday of the month at 11 a.m. Like I said, it was intended to be more of a planning session, lighthearted, looking forward. This month, the kind of changed our, agenda a little bit with what's been going on in the markets, but we'll be back again next month as well. And we will, hopefully have a calmer market to talk about. So let's go ahead and kick this off. Tom, glad that you are here. Thanks for being a part of this. Welcome in.
Wow, big crowd, huh?
Yeah, we got a full one today. I expected to see a lot of
Hello, Kane. Hello, Jack.
Hey
Hey,
guys.
Tom. Hey, Kane.
Good to see you.
How are
Hey,
you all
Tom.
doing?
I got a question for you.
Okay.
Am I still lovable, Jack?
You still lovable, Jack. Yeah, absolutely, you're lovable. Where you just let everybody know where your location is. Is it Colorado or Florida?
I'm in Florida right now. I go to Colorado in June.
Yeah, I knew you went back and forth.
Yeah, you're on the beach today, huh? Looks windy out there.
Yeah, right. Adam put that up when we were doing our anniversary class. We got it coming up, and I said, give me a new background. He put it up. Then he changed the one at the office, which when I'm at the office, but I'm at home now. I gotta get him to change me and give me another
Yeah.
background.
No, that looks good.
I
Yeah.
think we're all looking sharp this morning. I'm
Yeah.
excited.
Yes,
Thank you all
very.
for being here, making time on your Saturday. Kane, I know it's like 8 a.m. for you out there on the West Coast. So
Yeah.
thank you especially for waking up early and being a part of this. Like I said, I was just telling folks this was meant to be kind of more of a let's look ahead and plan the month of April session, and the markets had different plans for us over the last couple of days. So we're making it a lot more actionable and a lot more, reactive, I guess, to what's going on. So I thought I'd start with just a couple quick questions for each of you before we dive into the bigger, sections and what you guys have to share. And those questions are this, to the best, of your ability to answer them. How close do you think the bottom is, or is that even possible to tell right now? And then what's, one stock or anything, ETF, ticker, commodity, whatever that you're watching closely right now, either to see where things go or maybe to, potentially trade one direction or the other. So let's start with you, Kane. What do you think about the bottom and then something you're watching closely that we can give folks to, kind of hang on to?
Yeah, I think the name of the game in the market right now is uncertainty, right? I think that's probably why we have so many people showing up on a Saturday is like, well, there's so much uncertainty in these markets. So to say like how close we are to the bottom, well, we actually have a much better clue now that the April 2nd has come by and we've had a reaction to that news than we did before. So how close we are, or at least we got a lot more information. Right now, I think what we need now is to see the reactions of other countries. So now instead of, oh, this is Trump's tariff move, now we need to see what the other countries are going to do in order to react to it. And so it's going to be much more individual on a country by country basis. So we do have a lot more information and we're just waiting for each country to respond. So I think we are a lot closer to the bottom than we were before. And obviously the market has moved quite a bit the last 2 days. And if we're talking in terms of a bear market, well, officially a bear market is 20%. We're pretty close to that right now. So I think we are getting pretty close to a bottom. I would say maybe 70 to 80% certainty that we are going to see a bottom pretty soon. In terms of what I'm looking at transportation, shipping in specifically, because the tariffs will directly affect shipping. And if we see a turnaround in shipping, then that'll be an early sign that the market will start to turn around.
All right. Is there any one like ticker that folks should watch as, kind of that leading indicator there?
Yeah, I'm looking at STNG in particular. Yeah.
All right. Perfect. Thank you. Jack, let's go to you. Same questions. What are you thinking about the bottom, how close we are, and then something you're watching in the short term?
I can't see the bottom. I don't predict. I don't predict. I
Yeah,
react. So
surprised.
that's not my style to predict. That's very dangerous to predict. But I'm going to nibble down here. I just can't. I love this. I love this market. I love this sell-off. I love this flush. I was waiting for this back in November. We didn't get it because we had the election, but we were way overdue for this. And I get more nervous. Not, I don't really get nervous, but I get more concerned when everything's making a new high and everything's ripping. That's when if I was going to bite my nails, that's when I'd be biting my nails. But this, nobody knows what a tariff is. Nobody knows really how this works, right? So what I'm saying is this whole market sell-off is a massive overreaction. People are just scared to death. And now this fear is into a place where people don't know what to do. They're freaking out. They're losing their money. I never got more calls in the last 2 years than I got the last 2 days from people that just have 5 grand in the market or 5 million in the market and want to know. There's no bottom in here right now. There's no support. Nobody wants to own anything. There's no reason to buy anything. Just because it's cheap doesn't mean it can't get cheaper. But I'll tell you this, going forward, I'm not looking at any really one stock. I'm big in NVIDIA. But the thing about it is going forward here, strategy selection is going to be more important than stock selection. So I see this overreaction is driving volatility up, and my strategy selection is going to be selling options. That's where it's at for me. And this is heaven for an option seller.
Awesome. That's a really good point, and I'm sure you'll dive into that a little bit more in just
Yeah.
a bit. T-Buzz, how about you? I know we're gonna ask you about kind of your experiences here in a minute, but what do you think first about where we're at in the market and anything that you're watching carefully in the next, say, week to 10 days?
Well, I guess I've been in the market so long that I think about different things like numbers, okay? Because your emotions will take over you if you got a stock that's dropping. And I think that when I look at this market, I look at it as an opportunity because you just got to have a strategy that's going to pay you. For example, I think you saw something that I did with 30 minutes to go on Friday afternoon. Uh, we bought like an option for 6 cents and it closed at 30. And so there is ways to make money, but you got to know how to do it. You just can't sit there and say, well, I'm not going to look at my stocks. I'm not going to look at anything and go hide and have your head in the trash can during this kind of period. This is an opportunity. I agree with what Jack
Amen,
said.
brother.
I
Yeah.
think if you will just keep your head about you, it's a big opportunity. And I do a 24-hour market, so I'm pretty tied into numbers and that kind of stuff. And I think that we're very close. I'll say this, very close to a low, maybe as early as Monday. And I'll say that because we could have went limit down on Friday and we
Hmm.
stayed about 20 points away from it.
Yeah.
So Sunday night ought to be interesting as you see things happen. But here's the issue. Okay. Already, and by the way, I don't think this is a crash. We're really just back to uh, April of 24 right now in prices. If you look at all the key prices, so we're about right where we were 12 months ago. So it's not a crash. It just happened so fast that people got used to an upward climb. But I've got a couple numbers that they can write this down. If they'll send an email to TG at DTI Trader, I'll give you where my target is to the downside, and I'll tell you where you're going to know it's going to turn. I've been working on it ever since last night. I'm prepared. Sunday night we open up with my planning session, and we've been having a lot of fun because this is the market that I built my company off of. We used to be known as the Day Trading Institute. We changed it over to diversified trading. And so I think that I'm pretty excited, as Jack was, about the fact there's just a big opportunity here,
Oh, unreal.
in a market like this.
Well, that's one of the reasons I love doing these things, especially for traders. We got a bunch of folks here in the room right now, and just all three of you guys are not panicking. You're not, overwhelmed or scared about what you're seeing. You're seeing the opportunity, and we love that. And I hope folks can kind of, absorb some of that too, and turn away from panic, because panicking is definitely the worst thing you can do in a market like this. Tom, let's stick with you. One of the reasons we wanted to make sure you were on here is you've got a wealth of experience. You've probably forgotten more about trading in crashes than most guys ever learn. So you have been obviously traded through the dot-com crash, the housing crisis, COVID, and you've been very open over the years about your time, and back in 1987, Black Monday, what you experienced there. So what can you tell folks about, whether you call it a crash or not? I know you said you
Doesn't
just
matter. If
wouldn't
their
call it a
account's
crash,
way
but
down, they're crashing individually. Okay.
yeah, exactly.
And
So what would
so,
you say to folks in trading in these kind of market environments?
well, you got to listen, number one, because there are people that do very well in these type markets. And I think the characteristics are you got to look at the numbers and do what the numbers tell you to do. Okay. Now, I'll tell you this. What I would tell people is the following. Options are very tough during this type of environment, even though I was very successful Friday afternoon and I only risked like 6 cents, okay, on an option. Okay. And you say, well, that's not much, but the opportunity was there because I was looking at the futures market and it was melting. I said, hey, I can get in here and make some money. And I did, and I shared it with a bunch of people. But the whole point is that the best market to trade during this market, and Kane, you remember this, probably where we met, is the SQQ or TQQ. It's simple. It could take $1 million of action without getting screwed on the bid and ask. And SQQ, TQQ, simple. you just, if the market's going down, you buy the SQQ. The market's going up, you buy the TQQ. You can't get any more simple than that. There's no commission on it. And all you have to do is have a process to know when to buy and when to sell. And, that's what we specialized in for 40 something years. As far as the crashes go, 87, I didn't know what the hell I was doing. And my bank account showed it at the end of that day. Okay. As you got moved forward, maybe I got a little smarter. Okay. But the 2000, that's where, if you remember, you saw the picture of the Corvette I bought on one day of trading. That was a cool thing because I caught that move. 07, 08, I saw it coming. I got a video where I was being covered by all the news agencies talking about it before it happened. That was a crash, okay, the 07. 2022, I had a great year and the customers had a great year because the market was going down. Everybody was talking about it going up.
Yeah.
Not going up. So I think that there's a lot of opportunity here, and it might not be down, it might be up. There's a lot of good things happening behind the scene, and I'll cover that later on when you ask me the question. But I tell you, folks, you got to pay attention. It's not don't look at your statement. Check and make sure that you're in the right thing. And a layup, this is a layup for everybody out there. You don't even have to trade this one. You can buy TLT, it's going higher because interest rates are going lower, and they might not go lower tomorrow or the next day or whatever, but by January of 2026, they're going to be lower. We started that cycle. So there's a layup trade for everybody to do. If I had something losing money, I'd take that money and put it over at TLT because that's an easy way to play it. Those are some examples to make money, in this environment.
Awesome. Yeah, I mean, one thing I wanted to ask you too, Tom, is, you've talked openly in the past about 1987, how you got pretty cleaned out on that day. What are some lessons that you learned that day that you'd want people to know, with their own accounts that you now going forward?
Yeah, the thing you got to do, and like I said, options are very tough because the bid and ask, even on the very liquid ones, have spread, and you get screwed getting in, get screwed getting out. That's why I like the SQQ, TQQ. But one of the things you got to do is play a lot smaller because the volatility is so great. The VIX right now is pushing 33. I get nervous when it's above 20. Okay, it's above 33, and so that is telling me we're probably closer to a low than you would expect. And it wouldn't surprise me, come in Sunday night, Asia sells, Europe sells, everything sells, but by the time we come around, you're going to start seeing some different things happen that give people some hope. Okay, and you can tell that by the direction. It won't be a immediate turnaround because they've done some damage. They've done some technical damage in some of these stocks. Okay, and people are sitting there thinking over this weekend. Here's what they're thinking: I'm getting out of that stock, and those orders are going to be placed for people that work or people that do other things. And so you got that rash of sell orders, I think, are going to be there, come Monday. Not a lot of people are thinking right now they want to go buy stocks. Okay. They've heard that on TV where this is a great buy, and then they're down 7% in a day. You know what I mean? So I think the uncertainty will keep the buyers on the sideline for, a few more days. But the traders, I think, might be buyers sooner than later. That's what I'm thinking.
All right. Thank you for that. Tom, you got a few more minutes here. Anything else you want to share with folks? Or
yeah, there's a couple things. If you're looking long term right now, and you're thinking long term, inflation is coming down. Mortgage rates are coming down. That's going to help the housing market. Crude, here's something nobody's talking about, but crude is down 10%, and that's going to price into products and all that because crude is a core reason that prices go up. The jobs was good numbers. They're going to get better. And regulations on businesses they're cutting in right and left. That's going to have an effect maybe 3 months, 4 months down the road because people are going to have lesser cost to do business. And you got a business friendly environment in the administration. In the short term, like I said, you got a loss of confidence, so you got to get past that. The market's like a temperature gauge. Right now it's running pretty hot because everybody's all excited about the numbers and what they're falling. The VIX is greater than 30. VIX goes less than 20. You'll see things lighten up and you'll see some uptrends. But the momentum is definitely to the downside. You can't say this is a low because you don't know how much people are going to panic or what they're going to do,
Mhm.
And so that's the thing. The biggest thing that people are to be watching in the next 60 days, do they get the tax cuts and the legislation through Congress? That's my biggest concern about everything. Once that's through Congress, you're going to see a lot of confidence come back in. You're going to see a lot of things good happening. But that's a worry for me because anytime you're dealing with Congress, that's a really a Russian roulette thing.
Yeah, absolutely.
Those guys that have those positions are maybe not the most sharpest tacks in the box. Okay, and so you got to worry about that.
Yeah, especially with margins this thin. Well, thank you, Tom. We've got a lot of questions coming in. We'll dive into it in a bit here. But Jack, I want to move on to you for a bit. Tom was talking about the VIX, especially being up above 30. I imagine for you, with as much premium as you like to trade, that's actually something you can turn into an opportunity with that volatility jacking up premiums. So how are you looking at the markets right now? You said you see a lot of opportunity here, so tell us about it.
Yeah. Yeah, I love it. First, I want to tell you my 1987 story.
All right, let's
Uh,
hear it.
all right. So I'm
Don't tell me you
26.
made money, Jack. You make me sick at my stomach.
No, no, nothing like I did make money, but in an odd way. So
Okay.
I'm 26 years old. I'm the assistant trader to the head trader at a small brokerage firm. I got a client that lives in Saddle River, New Jersey, that's the CEO of a huge company everybody knows. And the only way I got his account was I had his son's account, and his son was buying a bunch of crappy options and stuff. And I got to know his dad, and he did a few trades with me. But this guy was really well connected. I mean, he knew everybody at Lehman, he knew everybody everywhere, Wall Street. So the crash is going on, and if the windows could have opened up in the brokerage firm, guys would have jumped out. We were on the 17th floor, and they were freaking out. And you got to remember, back this is no cell phones. There's no internet. The only way to get a quote was to call a broker, and that was hard, impossible to get through. And then word of mouth, right? That spread. It was crazy, and it just got worse and worse and worse. Then right before the close, this guy calls me out of the blue. I hadn't talked to him in months. And why is he calling me? Because he can't get through to anybody at Lehman. He can't get through to anybody at EF Hutton. He can't get through to any of the guys he's connected to, so he calls me. And I'm listening to him, and the brokers are bringing in orders, and it's just chaos. And guys are crying. It's really chaos. So I'm listening to this guy, and he says, Jack, I want you to buy me $1 million worth of the Dow 30. And he says, "You want me to hang on?" I go, "No, it's going to take me a while to do that, so I'll call you back." And I got them filled, and we cleared through Southwest Securities. Tom, you may remember
I
them.
remember.
They're a New York Stock Exchange member firm, and they could not believe that I was doing this. And this guy had a lot of money, and I wasn't surprised by what he did anytime, but I was surprised he was buying when everybody else was selling. And this dude had cojones más grande for that moment in time. But boy, did that ever pay off. And I learned a lot from that. The money I made from that time was just, I had to charge him $250 per ticket. That was the minimum commission, if you can believe it
Oh,
back
yeah,
then.
it was 200 or $300
Yeah,
for a
just to
hundred
run a
tickets.
ticket. So I ran all these tickets, and he before he hangs up, he goes, "I don't even care what you charge me. Just get those filled." That guy made more money than anybody else I ever saw. So I got to start to see in these corrections, whatever you want to see them, is just a flush and something that's very healthy and something that should be embraced. Everybody was probably saying, "Hey, the market was a little too high." when Trump got in 2025. And this is really just a healthy correction. But this has happened so fast. When you look back at when these things happen, these overreactions, they don't last long, right? So all this damage has just been happened in like 48 hours. And if you look at a chart, it's just like it fell off a cliff. And when you look at other times back 5, 10 years, you see those kind of drops. They're very, very, very short-lived. Like what we had in COVID, that was a short-lived crash. These are short-lived. So when the door opens and everybody decides, man, were we wrong? We need to get back in. Just imagine a door that can only fit one or two people, and you got 1,000 people trying to get back in the market. That's really what's going to rock people. They'll be like, why did I sell? Look, Nvidia's up. We're going to see stocks make moves to the upside bigger than ever. And I was a little surprised to see stocks down 5 to 7% like Apple. That's a lot, man. 7% on a multi-billion-dollar company. That's a lot. This is going to be a face-ripping rally when it happens. But again, we're going to have a bull rally in a bear market, so even that won't last. But the bottom line for me is this up and down sharp stuff. It's going to increase volatility. That's going to increase the price of options. So again, for me going forward, I'm not focused on a stock. I'm focused on a strategy. Credit spreads going to be huge. All that kind of stuff. Even naked puts down here is going to be great. So I'm looking forward to how much premium is going to be priced into these options and how much I'm going to make by selling them. That's where I'm at. I'm not bottom fishing. I'm not, you know, messing around down here. Not too much. I am buying a little bit of stuff. And if you're a long-term investor and you're reinvesting dividends, this is the best news you could ever get. You're getting to buy stocks where they were priced back in August of last year. So look at your favorites. If you want to buy something, look at your favorites. Even if it goes down a little more, you're getting it better than where it was last week. So yeah, I like naked puts. I like credit spreads. What's so cool too is when you talk about option premiums getting jacked up, it's mostly on the call side, right? So when you're doing a bear call spread, it's almost like shooting fish in a barrel. All right, so last week I sold the 117 Nvidia call and bought the 118, created a nice net credit there. And then Nvidia goes what, to $90? I mean, if that ain't like shooting fish in a barrel, I don't know what is. And there's plenty more of that being teed up right there for us. So this is a great market to make money in. And man, my mouth is watering. There's so many juicy trades I'm looking at out there right now. So
I love it. Yeah, I mean,
that's me.
you have to be sitting pretty on. I know you've been doing the NVIDIA Cash Blueprint, kind of, counterintuitive with a lot of folks,
Oh, and
going.
yeah.
Go ahead.
No, I love that with the Tesla trades we're doing is that,
Mhm.
Tesla might not be the most traded stock, but it's often the most traded options. And really that is just creating an amazing opportunity for us there. Um, so Robert says, so Jack is waiting for a bottom confirmation to sell put credit spreads. Nope. I'm not waiting for any bottom. I don't wait. You can't make any money waiting, Robert, right? So I'm selling naked puts right now. IBIT, I got naked puts. PLTR, I got naked puts. Then I got bear call spreads on all the tech stuff, AVGO, everything. And you know what's really cool about the credit spreads and either side is that the price of the stock doesn't matter, right? So you can trade anything from O'Reilly and AutoZone at 3,000 a share to smaller stuff now. Nvidia under 100. That is just unbelievable. That's another good one. There's just so many good ones. IBIT. That's another great one to trade. So I'm more optimistic now. You just think about it. The market has more upside now than it did 2 weeks ago, right? So
Yeah.
yeah, you got to love it. You got to absolutely love it, and you got to look forward, and you can't get emotional and let this stuff get down into you. Like I was dealing with a lady friend of ours, and she was like literally hysterical yesterday, nervous, right, making herself a martini at 4 o'clock in the afternoon, like just can't calm down. I'm like, Susie, man, just look past it. She was worried, like, is the stock market going to go to zero? Are my stocks going to go to zero? She said. Of course not. Coca-Cola could go from 70 to 7. They're still going to pay the dividend, right? So it's just time to calm down and not look at the damage, but look at the opportunity.
Right. That's a really good point. Warren Buffett, I know, was asked on one of these kinds of days how much money he lost, and he said he didn't lose a dollar because he didn't sell anything. So,
Yeah. Yeah, I
he
can't sell. That's the other conversation I was having with my NVIDIA position. I'm down. I'm still up on it, believe it or not, because my cost basis is so low. But I'm not going to sell it for a couple of reasons. One, I've got it optioned out all the time, right? So if I'm cash flowing this position every month, phew, I could care less where it goes.
Yeah.
So that's really the best thing right now.
One
Don't worry
last,
about yeah. Don't worry about it. Just find your opportunity, keep a calm head, and relish. We've been given a gift right here for traders, a real gift.
one last question on that for you, Jack. When you're talking about selling premium, selling naked puts or credit spreads, is there any criteria you're looking at as far as picking stocks, or is it just a target-rich environment right now?
Yeah, it's a target-rich environment. Stuff I want to own. I still have people think in this market selling a naked put is stupid, but I'll tell you, it's so hard to get assigned, right? Even when you should be assigned. Like I had a trade on IBIT, naked put. The stock went below that. I still didn't get it put to me. And then it went back higher. I never did get it. So the yield on the naked put is really high, especially if you're using margin because you only need 20%. So less money on your part gives you a higher yield on the other side. But this is a great market. I just want to encourage everybody that we have one of the biggest market money making opportunities I've ever seen. So I'm going to be in there with both hands.
Awesome. Thank you, Jack. I'm sure we will have some questions for you in the Q&A here as well. But Kane, let's get to you next. I don't think you have any stories from trading the 1987 crash, but I'm sure you have
Kane,
some
Kane
crash.
doesn't look old enough for that. He was probably born after 87.
Not 1987, but what I found is that the best traders, it sounds like Jack and Tom, they started their careers in kind of a bear market or very close to a bear market. I started my career in a bear market. Actually, it was the '08 crash. I was a junior trader on the CMBS desk at the largest mortgage shop in the country. So I had a front row view of that entire crash because that's the exact market that took everything else down. So what you find is the guys who started and came up through a bear market and a recession, they have a very different perspective than other traders, because we came up in a time where everything was tough and everyone was fearful, but we got to see the opportunity that was present during that time. Whereas if you started in if you started in 2023, oh my God, all you ever knew was bull, 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 bull. And suddenly this is probably a huge shock to you. Mm-hmm. And you might be running around with like a chicken with its head cut off going like, oh my God, what do I do? So I think it's interesting that all of us came up in that type of environment. Yeah. And we're all seeing opportunity. So I think the main takeaway, just real quick, from what I heard from Tom and Jack is a lot of people in the chat, they're asking, well, what should I buy? And what should I, they're looking for that quick tip. Like, oh, I want to, what do I buy right now in order to make some money? But if you listen to what these guys said, they're giving you gold. They're giving you how to keep on making money in this current environment. So one thing that was said was volatility. And in volatility, you trade small size because you don't need a lot of movement, or that movement comes so fast that you can make a whole bunch of money. So you don't need to put in large amounts of capital, and don't let greed get the best of you and put in a huge capital at work, because you do have higher risk in this environment. So you put a little bit of money to work and it returns you much larger, and you make the absolute dollar-wise, you make the same amount as you would in a normal environment without risking a lot of capital. So it's a huge opportunity right now. The other thing that I heard was actually what they didn't say. And what they didn't say was buy a bunch of options, buy some calls, buy some puts. They didn't say that. Tom said, hey, look at this ETF, TQQQ, SQQQ, excellent opportunities there. Why? Well, if you go into an equity or an ETF, then you are eliminating a lot of the volatility risk, and you're eliminating time risk as well. So in an environment like this, where the volatility is so high, this price can swing just in a few hours, way up or way down, you want to remove that volatility risk. And Jack is saying, well, why don't I sell premium? Well, that volatility is in his favor in that case. So you want to listen carefully, and you don't want to go and say, hey, I'm just going to buy a bunch of puts right now because the market's going down and I think it's going to go down even further, or I think it's the bottom, so let me buy a bunch of calls and it's going to go even higher. That's definitely not what you want to do right now. So the type of strategies that I'm focused on is very similar to Jack. I want to be a seller of premium. For me, from my background, I come from the bulk of my experience in Wall Street was actually on the buy side. I'm always thinking about hedging. And when we talk about a retail trader's portfolio, there's not really a lot, and sometimes it doesn't really make a lot of sense to hedge your portfolio because you don't have that many positions. And taking a hedge into your portfolio just reduces your returns for the most part, unless something crazy happens. So what you do is you have a natural hedge in something like a credit spread. So you buy something, you sell something, and that reduces your volatility risk, it reduces your time risk, it reduces, you have a natural hedge there because you have insurance backing you up. So I'm looking at spreads, for credit spreads as well. One thing that is important to understand that I think a lot of people don't understand is what exactly is uncertainty? What exactly is volatility? Volatility and uncertainty it means, what are we, like, which uncertainty are we talking about? We're talking about uncertainty of prices. We don't know exactly where prices are going to be. And that's why in a single day, you can have these huge 5-10% swings in a single stock because no one knows where it's supposed to be. So if I asked everyone, maybe something that everyone knows, which would be like, how many hours are there in a day? Every single person in the world is going to tell me 24 hours. There's going to be zero deviation in that. Right? But if I say something like, how long is the song Hotel California? Well, big fans of Hotel California will tell me exactly to the second how long that is. But other people will guess, well, I have no idea. I don't follow music, so maybe the average song is like 4 minutes long. That might be your guess. And other people, classic rock, sometimes those songs are a little bit longer. I'm going to guess like 7 minutes. Or other people know that, hey, Hotel California is a longer song. I'm going to guess like 10 minutes. You're going to have a lot of different answers. That's what uncertainty means. There's a lot of different answers. So in the market right now, there's a lot of different answers where the stock market should be. And that means your price range is really big and your market maker is pricing in a really big range. So if all you're doing is buying a simple call or a simple put, in order to profit, you've got to overcome that price range that the market maker set. And then the stock has to go even higher than that in order for you to profit. So you got to get the direction right and you've got to get the movement right. And that's really, really hard to do in this environment when the market maker has priced such a huge range. So it's the only smart thing to do is to add more tools in your toolbox beyond buying a simple call and selling or buying a simple put. And then that naturally means either you're going to go and sell naked, like Jack was suggesting, or he also suggested spreads. You've got to add spreads to your toolbox. So that's what I'm focused on is spreads right now because I like having that natural hedge in there. I'm actually teaching a boot camp Monday, Tuesday, Wednesday because I think it's the perfect environment for spreads. So that's definitely my focus in the market right now. Strategy, as Jack said, you got to pick the right strategy for the current market you're in.
Awesome. I think Deanna just dropped the link for that boot camp also in the chat there. Is there any, so you also talked about credit spreads. I'll ask you kind of the same question I asked Jack. Is there any particular stock or set of criteria that you're looking at for that? Or is it just, you would
Yeah.
kind of use your normal trade mindset and then,
Yeah, I always use a market driven approach. So I look at where is the SPY, DIA, and QQQ. If it's bullish or bearish based on my trend point software, then I'm going to plan a bullish credit spread or a bearish credit spread. Doing it that way is so easy, it's not even funny. So that's the first thing. Always use a market driven approach. Don't be going long in a bear market or short in a bull market. And then the other thing is I like stocks that have a beta over one. Beta is a measurement of volatility. So the broad market has a beta of one. Any individual stock that has a beta over one is going to be more volatile than the broad market and have juicier options premiums. So that's what I look at. And then I would like that stock. Any good stock for options has to have two things. It has to have directional bias. So that would be down for a bear call spread, which is perfect for like NVIDIA and AVGO, stuff like that. And it also has to have a little volatility. So it has to have directional bias and beta over one. That's what I'm looking for. So I'm using a market driven approach. If the market's bearish like it is now, I'm using bear call spreads on stocks that have a high beta or beta over one and are trending in the same direction as the broad market. That's the easiest, most profitable approach, right? So when I'm doing these bear call spreads, I see a question of when and how long out. So I put that trade on for Tuesday for Friday's expiration. So I'm in it 3 days, right? So I don't need any real trend. I just need it to not shoot up too high for that 3 days, right? Then that's why I say directional trading is really hard right now. Directional trading would be you're trying to pick a stock to go up or down. You buy the stock, if it goes down a penny, you're losing money, right? It has to work. With a credit spread, the stock doesn't even have to go down. It could go up, it just can't go up out of its normal range, right? And that's much easier for me to kind of program into my head than just closing my eyes and trying to pick a directional trade. That's brutal. But
yeah.
it's almost too easy right now on the bear call spread side. That's what I get a little nervous about that. I mean, when my grandson can pull it off, I gotta be careful, right? That
I,
reminds me of before I was married. I was in Vegas one time, and we were in a bachelor party, and I just got to tell you, we were in 2000, we were in this strip joint, and the stripper starts talking about how she's making more money stripping than she is. I mean, she's making more money day trading on E-Trade than she is in the strip joint. And that night, I'm in the cab on the way home with my buddy, and I'm thinking, maybe it's time we get out, right? And it wasn't weeks later that the market crashed, and I got to go laugh. My wife hates it when I tell that story, but it's the truth, So
Incredible. Well, you never know where these conversations are going. Not that Jack needs my support, but he is hitting
I've been all
96%.
over the place, man. I'm just saying.
But yeah, you are hitting about a 96% success record with those Tuesday to Friday credit spreads over the last 5 or 6 years. So you've certainly put your money where your mouth is. Kane, how about you? What are you looking for on those kind of income generation or credit spread trades?
Yeah, so if the market isn't going to give me the probability, then I got to find the probability in my strategy. And so I'm with Jack. If you design your spread correctly, then you can get a range for where you have a margin of safety in the opposite direction that you're trading as well. So I think that's really important because of the volatility. The wider you have that volatility, the more you need that. You can't just go in a single direction. So what we're saying is that you're not going to do it in a way where you are so, in the case of a credit spread, you would go, if you went in the money on that credit spread, then you would have a huge reward risk, but you would have a terrible probability. And that's not what you want to do with these things. Like the whole reason you go into it is to have that higher probability. So what you're doing is you're going far out of the money, and to a point where you have a high probability and you're still getting paid really well for it because of the volatility in the market. And that's why you get that extra cushion where it could go against you and you still make your maximum gain.
Buddy,
So
you said
that's what
it
I'm
better
looking
than
for.
I could say it. Yeah, that was beautiful. Thank you.
Yeah. Yeah. So that's exactly what I'm looking for as well. I'm looking for if I can go far out of the money, and I can still get those premiums and I'm not looking for an outsized return. I'm just looking for the same return that I would look for in a normal market, and that way I'm not risking any more capital than I normally would, but I'm still getting great return. I'm getting those huge premiums with I'm getting much more safety with the same risk.
Amazing.
Dollar
Tom,
risk, I should.
anything you want to throw in there, Tom, on that conversation?
Yeah, I had a question I just wanted to ask people because I got a few answers. If you just stood back and looked at what you did Friday, did you make money or did you lose money? If you lost money, type in here, I lost money. Give me some feel for what people did on Friday. And I want to bring that question up because it's the way I think, okay? In other words, and I'm going to take you from that question, okay? I'm going to take you from that question of based on my experience, what you ought to be doing, okay? So if you lost money, and I've said a lot of people lost money and appreciate the honesty. Okay, well, I made money on Friday. I had a great day, but the whole point is that's not what I'm talking about. What I'm talking about is the following. I evaluate the ability to adapt to the market. Okay, and so if you lost money on Friday, you ought to ask yourself the following question: why did you lose money? Is there anything you can do, okay, to mitigate what you did? And that might have been coming in Friday, being along a stock, or maybe you think, this stock's the greatest stock since sliced bread. Well, there's things that you can do if you think that. I don't want to sell it for tax reasons. You can do things with options to protect yourself on those type of situations. Or if you're going to speculate, we'll speculate on the side that's paying. Right now, the side that's paying is the down market. That will change. It could change as early as Sunday night. But the point is, you got to look at what you do and you say to yourself, did I take the appropriate action to protect your account? The best thing you can do if you don't know what to do is educate yourself. Okay. And if rather than sit there and take loss, because nobody knows, we're down, for the week, 8.5%. Nobody's saying we won't be down another 8.5% this week, okay? And you say to yourself, what can I do to mitigate what happened to me this week? Well, the first thing you do is maybe figure out how to hedge yourself if you want to stay with what you got, or maybe get out and go to cash and get a game plan to take advantage of it. It is going to get good, but here's the problem. And I've seen this over the years. The problem is that people will stay in a stock that doesn't make any sense because they believe it's going up and their account's telling them a different story. This stock ain't going up, it's going down. So what's wrong with getting out and setting a point to get back in at the right time? And what's the right time? Here's the right time. I'll give you the answer. The answer is when you start seeing the monthly movement, instead of being negative, being positive. So the first thing you need to know, the simplest thing in the world to know, is to know where things open for the month. The month will give you the key to the market. You can spend 40 years studying the market like I have to come to that conclusion, but everything that's below their monthly open is not in my portfolio. Everything, when I look at things, I'll tell you a story. Jack's good at stories. I got a story too. I'm walking around the neighborhood, okay? And a guy's getting killed in 2022. He's got a multi-million-dollar portfolio. He knows about me. He stops me on the street. He says, Tom, I'm down 15% in the market and I don't know what to do. My advisor says, hold on. I said, let me tell you what you ought to do. Go through your portfolio. I don't know what you got. And if it's below the monthly open on these stocks you own, because he had no sophistication at all about how to hedge himself or do anything else, he said, here's what you do. Get rid of everything that's below the monthly open. Well, I didn't see the guy for about 4 or 5 months. I was walking around the neighborhood I saw him, he came up. He said, "You're the greatest guy I've ever met. I'm up 300,000 from not losing money." Now think about what I just
I
said.
love that. I love that.
Very simple. Look at the monthly open. I don't care if you're a technician. I don't care what you know. Don't trade stocks that are below the monthly open. That's my rule. It's the best rule I came up with in 40 years. I can study another 40 years. But if I look at something and it's below the monthly open, you won't see me buying it, okay? Because I understand that the monthly open, and then, I'm a little bit short-term oriented. And, that's why every day at 10:15, I'm telling people to be long, short, or out because I can do it. And I can be right about 80% of the time. How can I be right? I've been doing it for 40 years. And people say, I got people been with me 15 or 20 years, and like Jack's been around. People understand it's not 100% accuracy, it's the ability to be right more than you're wrong and lose less than you make. That's the key. Okay. I don't care if you're 50% accurate. You got to make more on the 50% than you did on what you lost on the 50 you lost. And so losses are what you had to deal with. Why I asked the question when I started was, who lost money? Well, you got something to do before Monday. You got to think, how are you going to do better next week? And what are you going to do? And if you get out of something, when are you going to get back in it? Okay. That's the way I would approach it. Also, somebody was talking about brokerage accounts, and I don't have it, but if you are new to options and all that, I would recommend going to Tasty Trade because it's a simple platform to use. The owner of Tasty Trade is a friend of mine, Tom Sosnoff, and I've got a referral link. You don't have to have a certain amount of dollars to get approved for any type of trade because he understands options. The actual owner understands options. So if you'll send an email to TG@DTI Trader, TG@DTI Trader, I'll have Jonathan send you the link, and that way you just skate right through. Okay, that's TG@DTI Trader. But let me tell you, it's tough when you're sitting there every day and you're looking at your stocks and they're melting, and you see these stocks. I mean, I'm looking at some of these daily losses. I mean, goodness gracious, nobody can tell you they're going to stop on Monday.
Yeah.
Nobody can tell you that. This is short term. It's done some serious damage. And keep your eye on that VIX because, like I said, when that VIX gets back below 20, then the waters will be able to wade back in. That's my thoughts. Anyway, I hate to be so passionate about it, but I've lost so much money over the years. I like to break things down and keep it simple. Okay, as Jack said and Kane said, the idea here is be around when the good times are starting rolling. I think it's going to be pretty quick.
Yeah.
Maybe 30, 60, 90 days. Okay.
Well, thank you, Tom. Yeah, and I sometimes forget I'm moderating this thing because you guys are giving so much wisdom. I really appreciate that. I think what Kane said about all of you having been through the fire before is really accurate and really helpful. So we've got a lot of great questions here. We've got 10 minutes or so. We want to get through as many as we can. One question, and Tom, I think you kind of just answered this a little bit in what you were talking about, but we got to, obviously we're not financial advisors here, so we can't directly tell people what to do in their accounts. But hypothetically, if you lost, let's say $5,000, over the last 2 days or over the last week, whatever, I'm curious what you guys would do next. Is it, maybe it's a trader psychology thing. It's just waiting a day or two and letting yourself kind of recover from that. Maybe it's a particular trade you want to put on, but for all three of you and Tom, maybe you can start, and then Jack and Kane, what would you do next if you were in that position where you had personally lost a big chunk and, were trying to pick up the pieces a little bit?
Exactly. And a lot of people in that boat, I'd go to cash and then I would say to myself, what am I trying to accomplish? And here's what I found out. When you go to cash, it sounds bad, but when you go to cash, great things happen. Your biases go away and you start looking at things realistically, and you say to yourself, what did I learn from that experience? What can I do better when I come back? What kind of process am I going to use? Jack uses his software. I use, use the roadmap software. Now, it's a process. When am I going to enter? When am I going to exit? Where am I wrong? Those three questions have to be answered before I put a dime on the table, okay? Because that is important. But, you know, you can play baseball, okay? If you got, the way I do it, you play baseball. You know, if you get 3 strikes, you're out. You know, you divide your risk capital up and you say, hey, if I lose 3 times, maybe I ought to take a little break and a pause in the action. You'd be surprised what not putting your hand on that mouse will do for you. You feel so much better because, you know, and if you pick the right day, it's at the bottom, you'll feel a little bad. But the good news is the next time, the odds say you'll be right. So take that break, okay? Rick says I ought to write a book. I do have 3 books, Rick. Winning the Day Trading Game, The Markets Never Sleep, and Trade to Win. Get it, listen to it. I wish I could give you the link. I don't know if Adam's here. You can post a link in there and you can
Adam
listen to the
was here.
audio.
I think you can drop the link.
Yeah.
Tom, I have seen you at live conferences too with traders face to face, just telling them, hey, take your hand off the mouse for a minute and let's think through this. So that's sage advice. Jack, how about you? He's hypothetically just lost a chunk of your portfolio. What's your next move for?
Well, not hypothetical. I have a dividend for life portfolio. I never sell. I never go to cash, and I took a hit on that. But I'm fine with it. You know, I'm reinvesting those dividends. I'm buying stocks prices they were a year ago, and I never go to cash in my trading account. I always have some cash. You know, a big pile of dry powder, but I never sell out everything and go to cash. Right. I keep my
You've been
trades
trading
real.
for 40 years, Jack. You've been trading a long time.
Yeah.
I think the question is really directed to people that's going through this for the first time.
Yeah.
Because the first time you go through something like this, it's pretty traumatic to see your account drop 30 or 40% in a few
Yeah.
you know, days.
Especially if you're not getting paid
Right.
on it, and if you can't cash flow it, right? You got a stock that, you know, like Bitcoin. I always talk about that. You can't sell covered calls on Bitcoin, and Bitcoin can't pay you a dividend. So if you're down on a stock like that, where you can't not cash flow it, you're better off selling it. Book the loss, take the loss, and put that money to work in a better, smarter way. And have a short memory. You know, I had a friend that coaches in the NFL, and he coaches these defensive backs. So when they ever give up a touchdown, they're all bummed out, and they come over to the sideline, and he says, "Look, man, you got to have a real short memory on that. Just forget about it. Go back in there and play. You know how to play. You're good at this. You gave up a touchdown. Forget about it. Have a short memory. Go on with what it is you do." So I didn't take a hypothetical loss. I took a loss. I still sell covered calls on those dividend stocks and reinvest all of that. So that part, I'm loving it, right? I really love, like, I get a reset on that. And the trading thing is, you know, I got a bloody nose here and there, but it ain't no big deal. That's part of trading. Nobody should be shocked that they could lose money in the market. This just goes to show you how much risk is really in this stuff, whether you believe it or not. Look, right? Woo! I didn't know Apple could go down 7% in a day, right? Hey, this is where we're at.
That brings up something, the way I think about trading. I don't think of this as one trade. I think of this as one of the next 10,000 trades.
Yeah.
That puts things in perspective emotionally for you because it can kill you if you just focus. When I was a young trader, I'd stay up at night, you know, digging through charts, beating my head against what did I miss? What did I do?
Yeah.
I didn't miss anything. I was just wrong.
That's it. I tell people, you know, I boxed a lot in high school, all through college, and after college a little bit. And, you know, my wife says, well, how did it go? And I said, well, you know, it's a 15-round fight, but I just got my ass kicked in this round. I'm bloody, and that's part of it. You can't be surprised getting a bloody nose when you're boxing. Same thing. You can't be surprised taking a big loss when you're trading, investing. This market is loaded with risk, right? And that's where your money's at too. But yeah, I took a loss. I'm moving on. I got a bloody nose. It ain't bothering me.
Awesome. And Kane, how about you in that same hypothetical?
Yeah, I think you have to distinguish if the portfolio you're talking about is your trading portfolio, or if it's an investment portfolio.
Yeah.
If it's a trading portfolio and I took a huge loss, I got to ask my question: why was I positioned so large? Like why did a single day's worth of trading take my portfolio down so much? That means I overextended my allocations. My allocations were too big. So remember when we said earlier that the VIX is super elevated, we have a lot of uncertainty. And so, but because of that volatility, you can get paid on small size. And so you go in small size when you have a lot of volatility. And that way, if things go against you, you just lose a tiny little bit of money. You don't lose a whole bunch, but you can still have the opportunity to make the same amount of money that you did before. So if I took that hit in a trading account, then I got to ask, well, oh, I'm allocating incorrectly. I got to sit down before I take another trade. I got to figure out my allocations. If I took it in an investment account, well, it's an investment account, then it happens and you're in it for a long term, and you got to ask yourself, is it still the reasons why I took this stock? Are they still in place? The reason why I thought it was a value stock that was going to keep on growing in the future, does it still exist, or did the market just take away the value of that stock, or do they no longer have their competitive edge? Something fundamental about their business just isn't going to work anymore? So if for example, we announced that we're going to have 5,000% tariffs with China, and the business operates completely 100% on importing from China, then that business is probably screwed, and I probably don't want that stock anymore. I'm going to take my hit, I'm going to take my loss before that thing goes down to zero.
Now, would you apply that to Apple?
No, I wouldn't.
They're the biggest China.
Well, they've got, I mean, China is huge on their physical device side, but they have that huge subscription, and they've got the Apple Pay, they've got the music, they've got the TV, all of that, which will be insulated from that.
But people are just looking at Apple and China, right? They're not even taking into consideration all that other stuff you said. Right? They just associate Apple, China. Apple's done. So what do you think? You think Apple's got a little bit of bounce in it?
I would sell puts on Apple and be willing to take them.
I think that's such a great example.
Ask me that question.
All right, Tom. Apple's been associated with China, Tom. Now, I should ask you the more important question, Tom. You know, we all know that the cheese is the moon is not made out of green cheese, right?
Right.
But if it was made out of green cheese, would you eat it? It's a simple question. If the moon was made out of cheese,
number one, my answer to the question about Apple, okay, I would say, okay, let me think about Apple. It's got China, it's got all this other stuff associated with it. I agree with your analysis, but my answer is very simple. I keep it simple. I say to myself, where did Apple open the month at? Well, Apple opened the month at 219. Well, where's Apple trading? Well, Apple's trading what? Right now, today, it's, where's Apple? I don't even know. You can tell I'm not in it. But anyway, Apple's trading probably 180, right? Okay. The point is, what is it trading?
188.
Yeah, 188. Okay. So when would I buy Apple? In April, I'd buy Apple if it got above that number I just gave you, the monthly open. I'm not gonna mess with Apple. Why buy Apple? I might go buy a Dollar General, because Dollar General is above its monthly open, but I wouldn't buy it right today because I'd let the sentiment of the market die down a little bit. But I'm just saying, I go to that monthly open on any decision I make as far as a ticker when I'm thinking about buying stocks or selling stocks, okay? And that's just the way I think about it, Jack, because there's a lot of good copywriters out there that write some great stories. And I mean, you read some of these, it looks like almost like these Academy Award winning movies, some of the things I read on the internet about some of these companies. You know what my answer always is? Is it above the monthly open or below the monthly open? Okay. If it's
but Tom, you're talking from a trading perspective, right? You would buy it as a trader after it closes above the monthly open.
You talking about for the year? I'm talking from the year, I want to be above the yearly open. Okay. But if I'm talking for trading for the month, okay. So you ask yourself, well, okay, where did Apple open the year at? 250. Okay. I haven't bought Apple all year, and that's a good thing because the market's been telling me Apple's not going up. Even though, Jack, They got other business other than that. Now, if I'm trading it, I'd probably be doing credit call spreads on it, okay? Because obviously the trend's down. But if you use the logic, let the market tell you. It's very simple. Where did it open the year at? Where did it open the month at? Then you get shorter term. Where did it open the week at? Then you get real shorter term. Where did it open the day at? Then you get really short term. Where did it open? There's four big time periods in the day. One is in the evening when Asia opens. Okay. The second one is when Europe opens. The third is when the U.S. opens, and the fourth is when Kane wakes up. That's at 12:30. Okay. So if you know those four times, okay, then you've got the time that there's going to either be a reversal, there's going to be an acceleration, and keep it simple. You don't have to complicate your life with all the stuff that Wall Street tries to get you to learn. Okay. I spent a lot of years and lost a lot of money going down these rabbit holes. And guarantee you this, go check your portfolio. If you're here today, go check your portfolio. If that stock's above the monthly open, you got a good stock. If it's below the monthly open, you got to ask yourself, do I really want to own this or am I hedged? That's what you ought to be doing when you leave this webinar, and then you'll see a picture will start developing. Okay. When you were making money on the stock, guarantee it was above its monthly open. Think about it.
Fair point.
This is sort of going back from Livermore, and there's a good book people can get. It's called The World's Greatest Stock Trader by Jesse Livermore. One of the best books I've ever read. It talks about tape reading, and I'm a short-term trader, obviously, but it talks about that. And then I think that if you go, Stephen, and I want to stop before I forget, you're a natural at doing this, man. You should do this. I mean, this is really great, isn't it, guys? I mean, Stephen being the moderator on this.
Love it.
Yeah, this is great.
Great. Yeah.
I'm learning a lot from the other guys too. I'm learning a lot from Kane and Tom and even Stephen. Yeah, I love this. I love these roundtables, man.
I appreciate it. We love doing them. You guys have been great, and I forget I'm hosting it sometimes because I'm just listening to you guys give the wisdom. It is 12 now, and I want to be mindful of your Saturdays. So let me just close with one last question, if you'll give me the opportunity. There's so many in the chat. Hopefully we'll get some time to get to some more of them. I can message you guys later in the week and ask you some questions too, and get people answers on Telegram and in our newsletter. But let's close with this one. And I think I've learned enough from you guys this just during this hour that I kind of have a guess how each of you will answer, but I'm curious if I'm right. So Robert asked, how are we going to know, when we see the end of this, when prices start to move higher, whether that's real and it's a real reversal and we're actually out of the woods, or whether it's just a false alarm and there's more downside risk? So what would you guys look at to say, or would you not look at anything to say, here's the quote unquote bottom, and here's where we start to move higher and can, fully invest with confidence? We'll close with that. And Jack, why don't you start?
Yeah, I think that we're going to see a face-ripping rally, but we're still in a bearish market. We're going to hit a ton of resistance as it goes up, and then it'll fall back from there, and it'll eventually gain ground. And SPY, DIA, QQQ, they got to have to close above all three trend points on my software for me to say that the bear is over. But right now, it's all to the downside. But because it happened so fast on the downside, we're going to have some real face-ripping rallies to the upside. But you got to remember that it won't last because it's going to run into resistance. Then it's going to work its way out.
Awesome. Tom, how about you?
Say the question again. I was trying to put that Tasty Trade link in there because they were trying to get it. Just go to, I guess I can't, I was trying to copy and paste it, but that's okay.
Maybe Adam can grab it for us. He's in here.
Yeah.
The question for you was, when we do start to see some move back to the upside, how can folks determine whether that's real and actually a reversal, or whether it's just kind of a false alarm?
Okay. Well, you got to look at how we got here, okay? And so the simplest way to look at how we got here whenever it occurs, okay, is to look at the break points and whether the break points are a weekly start or a monthly start or a daily start. And so the numbers as you're coming down, I was shocked. Like the QQQ, for example, okay? The QQQ is an example I'll give. It's at 422. I can tell you resistance is going to step in at 438 because that is really the high of the last 2 days, which sounds absurd. We fell that far, but that's how far the thing could go once it started rallying. Okay, using the QQQ. And so, and every time you start one of these time periods, whether it's a week, a month, or even a year, that's where those points are going to be. And it's easy to see. By the way, somebody asked, how do you find the openings and all this stuff? You can, a good site that's free is barchart.com, and you put your symbol in there and it'll tell you where these openings are and the closes and all that. But anyway, you can do that. Tasty Trade is great. I don't want to sound like I'm pushing it, but it's for new traders, it's great. Okay. Tasty Trade is because it's simple and it's cheap and it doesn't cost you a lot of money. And like I said, if you use that referral link where you got 0 experience or 100 years experience, you'll get approved right away. Their compliance officer is the daughter of Tom, and I've known her for 20 years, and she sees that link, she knows
It's
about.
Tasty Trade. If you're going to do options, that is a great place to trade options. Tasty Trade. They know it. They probably know it and are more comfortable with it than any other broker dealer I've seen.
Yeah, they let you do it in retirement accounts and everything.
Yeah.
So
The approval process is 0. I mean, people talk about I can't get level 2 on Schwab. You're never going to have a problem with Tasty Trade.
Adam just solved my problem. I knew it was something really complicated. You go to dtitrader.com, or anyway, you just go DTI in the referral code, and then that gets you in the right pipeline. I've had it for a long time, but you can go there and do it. DTI. But one of the things I'm really excited about, and I don't know if this is the time to tell you, but tomorrow night at 8 o'clock, I'll be doing my planning session for the week. And I don't know how to tell you to come because I don't do that stuff. Maybe Adam can.
I'll take care of it.
You'll take care of that, Stephen? Okay.
Yeah. Folks who are in the Prosperity Pub Telegram, I will get that link out there for everybody. Adam can remind me tomorrow and we'll make sure it gets out to folks because that will be valuable. Kane, let's bring it to you. That same question, how are we going to tell false alarm versus a real reversal when markets do start to move back higher?
Yeah, so first of all, I don't think any real trader, pro trader is going to try to call a bottom and say, oh, this is a reversal. So if you want the highest probabilities, then you're going to wait for that trend. It's the indications of that trend. So Jack was saying, hey, he's going to wait for the price to be above all of these things in order for him to know that's the trend. And that's when he knows to start going the bull put spreads instead of bear call spreads, or Tom is saying, hey, I'm going to wait until prices are above the opens in these time frames in order for me to know that hey, it's time to flip my direction around. So it's going to be very similar for me. I'm going to wait for indications that, hey, we're making a higher high and a higher low so that I know that we're probably reversing in trends. I'm also going to be looking at VIX because the important thing that what Tom and Jack said, it's important to look at how we got here. We got here with huge elevated VIX. When I start to see recovery with small VIX, then I'm going to be a lot more convinced that that's a recovery because you can have recovery with large VIX. That's what Jack was saying. You can have a rip your face off rally, but that VIX is still going to be high if it's a rip your face off rally. So the VIX is going to be a very, very important indicator for me.
And when you say,
let me just say about what Kane just said. If you've been around long enough to know, that's one indicator you want to follow, which is the VIX, because it really gives you a real-time viewpoint of whether you got a trend that's worthy of trading or investing in, or a trend you really need to put your hands in your pocket, And
Awesome.
20 is the number. Below 20, things get a lot cooler.
And Kane, can you for the beginners?
That's VIX futures, by the way, not the VIX. It's VIX futures on Schwab. It's /VX.
Awesome. Thank you, Tom. Kane, can you give the intro to what the VIX is for the beginners in the audience? Because we've got a few questions about what that is.
Sure. Yeah, VIX is a measure of volatility in the S&P 500, and it's calculated by the options volatility, S&P options volatility over a few time frames. And basically, it's just saying the market maker thinks that the price is going to be somewhere between these two prices. And if those numbers are really far apart, then you know that the market maker is having a difficult time pinpointing where that price should be. And they are widening their spreads in the options market so that it'd be really expensive for you because they're out to make money as well. So if you buy an option in a high VIX environment, that means the price has to move an extreme amount in order for you to make any money on that option. And then if the VIX is low, then the market maker is a lot more certain about where how far the S&P 500 might move.
Awesome. Well, thank you, Kane, and thank all of you guys. Jack, I've got one more question I want to ask you in just a second, if you can give me one more second of your time. But for Tom and Kane, thank you both for being here. This has been, honestly, I expected good things, but this has blown away what I expected from just the education side. And I know Robert was just thanking us in the chat. I'm sure a lot of folks are thankful as well. So any kind of final parting words you guys want to share before we let you guys go?
Yeah, I got one. Trade what you see.
All right.
Great.
I like it.
Yeah. Watch your position size. It's not an environment to go in huge size.
Awesome. Thank you, guys. And Jack, final question for you, and we'll let these other guys go. I know your team is sharing at 1 p.m. Your new Tesla strategy, a
Yes.
stream of that. So I want to give folks the link to do that. But why don't you give us the 30-second or, 2-hour version if you prefer, but probably less than 2 hours because they want to be there at 1 p.m. But why should folks pay attention to that, and why is it so important right now?
Yeah, you should pay attention to what we're doing at 1 o'clock because there's a very strange but powerful market phenomenon with Tesla. And that is that sometimes it's the most traded stock by volume, other times it isn't. But most of the time, it can be the most traded options on a stock. And what happens there is you're going to push premium up. And another very ironic thing with Tesla is that you only need a 1 to 2% move in the underlying stock to hit a really big goal, a big profit in the option. Now, we got this new algorithm that gives us a really great green light when we have a better opportunity on that trade. But that's what it's all about. It's about taking these trades that last less than 2 weeks. You can get into them for about $125 on the low end or up to $5,000, $10,000 or more on the high end. It's got a tremendous win rate because of that phenomenon in the stock. It's a link, it's hooked to Tesla stock, but it's a play in the options, and it's for everybody that likes big profits, super clean. It's not about Tesla, it's not about Elon Musk, it's not about electric cars. It's just a little anomaly in the stock that allows us to make big profits in the options. And that's what I love it. Tesla could go to 1,000. It could go to $1, and this strategy is still going to be awesome.
Awesome. Well, thank you, Jack, for being here. Appreciate you making time for us on a Saturday.
Yeah.
Well, and I will look forward. I'll drop the link here in a second and get everyone to that room at 1 p.m.
Thank you. And I tried to ask Tom that question. You heard me.
Yeah, I didn't know if it was you or Harry Carey asking it. But yeah, I knew it. That was good.
I'll get it in next time, brother. All right. Love you, man. See you later,
Thanks,
guys.
Jack. Talk to you soon. All right, everybody. I will wrap up for us here today. Thank you. I really hope that this was valuable for folks and really useful for everybody. And the good news is, if you like these roundtable sessions, I believe we're going to be doing another one here in a couple weeks on April 15th on tax day with a kind of a unique hook if the market will let us, if the market will cooperate. We'll be talking about how, folks would invest some of their money if they got it back on their taxes. So look forward to that April 15th, which I should know what day of the week it is. I want to say it's a Tuesday this year. Let me look. I was actually right. So yeah, a Tuesday. 2 days before my birthday. So, that's how I remember that. But our plan right now, as far as anyone who's interested in the round tables, is to do two a month. What we're gonna, as I talked about way back at the beginning, for those of you who were here early, we planned this session in advance to be a more general kind of planning for the month session. It was meant to be kind of we bring on three or four guys and talk through their plans for the month, stocks they're watching, narratives, whatever, more general kind of Q&A and everything. And we were planning to just start doing that every first Saturday of the month. So every month on the first Saturday doing that roundtable. And then this week happened in the market, and I just made the call that we had to make it very practical and timely, or we wouldn't be, meeting all of your needs. So we changed it a little bit and made it, very, very action oriented towards the tariffs and towards what's going on in the markets right now. But that is still the plan going forward. Hopefully the markets do cool off. They won't stay quite this hot forever for sure. So we'll do the bigger, roundtable session sometime based, those are usually based around a big market event, a Fed meeting, tax day, earnings, something like that. Very actionable. And then we'll do the first Saturdays on the first Saturday of the month. So those will always be easy for you to find. You can join us at 11 for those as well. And yeah, obviously you can stay in the Prosperity Pub Telegram. That's the best place to keep abreast of all that stuff. I think Deanna dropped that link or maybe was looking for that link. If not, we'll get it for you here in a second. If you're not already in there, we'd love to see you over there. There was something else I was going to say. Oh, yeah, two a month is the plan. And then, I think Deanna and I talk a lot about being nimble and getting a couple guys on for, quicker sessions and midweek and, shorter time frames to react to stuff. So we may start doing more of that as well. But we hope you like these. The goal is just to provide you a lot of value and get you help in the market because everyone here, Prosperity Pub, Trading Pub, doesn't make a difference. We all want to see you succeed. And we know it's been a hard week for a lot of folks, and success maybe is few and far between. But what I really took away from this session and what our guys shared today, which, as I said multiple times, I just felt like I was right there next to you, just learning from the tree of wisdom. And a lot of what they shared to me is just a message of hope, message of patience. Don't get overwhelmed. Don't panic. Don't, throw good money after bad. Just take your time, reset your mindset. Watch what the market's actually doing. Don't, make adjustments based on headlines or panic. And, you're going to see your way out the other side of this. I think there were a ton of great insights. One of the things I'm most interested personally in watching is kind of those stocks like Apple, where there's a huge overreaction, in my opinion, based on based on this narrative that you can draw. Restoration Hardware, we saw this week drop, I think it's down 70% from its yearly highs. And the narrative is, well, okay, it's importing a lot of stuff from overseas, so it's going to get hammered by tariffs. And there probably will be some damage from tariffs. So the question you have to ask is, does that fundamentally change the business in such a way that its value drops dramatically? Because when you're buying stocks long term, this isn't necessarily a trading question, but when you're buying stocks long term, it's a question of what is the company actually worth and assigning value to that. So, with a company like Restoration Hardware, I'm not as big an expert. I'd have to do some digging. But if you're talking about Apple, I don't think Apple's going to just suddenly stop making iPhones or that people are going to stop buying them just because there are tariffs on China. Are they going to be maybe a little more expensive? Sure. But people will pay for Apple tech. I mean, how many times do we need to learn that lesson, right? Apple has wild fans and committed fans and, usually high net worth fans. It's not going to affect their business, in my opinion. That's, obviously not recommending you go buy Apple because I can't do that and wouldn't do that. But, in my opinion, that's a stock where the move is just very much a panic based. We see tariffs and tariffs affect China, and Apple has a lot of business in China, so we're just going to tank the stock 10%. Whereas, that's a stock that has a lot of long-term value. So I think that's one of the big lessons to take away. Everyone, I hope you got a lot of a lot of value from this. The class on Monday, is that on options? Dennis, what class are you talking about? Remind me, and then I will let you know. If you're talking about Kane's class, I think it's a boot camp designed to start very basic, and Deanna actually might know better than I do, but start very basic and kind of work your way up to a more advanced kind of option strategy, as I understand it. And I think it's going to be super valuable. Kane is a great teacher, and he will take the time to kind of answer all your questions and walk you through how you get started versus how you kind of advance. We need more of that. So I think that's be super valuable for folks. And Deanna just shared the link for that again. So we've got the YouTube link in the chat. We have Jack's link in the chat. Make sure you tune in to that in 40 minutes at 1 p.m. because that's super valuable as well. And I am not the owner, Omar, of Prosperity Pub and Trading Pub. We have some great owners, but I'm just the editor-in-chief here, and I love it. And it's a great job, and I'm very thankful for it. But no, I do not own it. All right. I think that's it. Any kind of final questions for me or questions, I'll come through the chat this week or, and look for questions we can ask these guys in kind of a follow-up sessions, maybe get some uh get some answers over on the Pub chat and or Telegram and get you guys even more value from these guys as well. Jody asks, who is the catcher in the pick behind me? Referring to that picture. That is the legendary future Hall of Famer Yadier Molina, who was the Cardinals catcher until very recently. And I'm a big Cardinals fan, and he's amazing. And that image is actually a really cool piece of artwork. It's all the scores from the year they won the World Series in 2011 and just kind of drawn out. You can't really see from this distance, but it's kind of drawn out so that it makes a cool image. Jack's 1 p.m. presentation is about his new strategy on Tesla. It's going to walk you through a lot of what he's doing, why Tesla is such a unique stock for generating income, and there will be a chance to join him with the service, but I think there's a ton of value there. I think you should check it out for sure. And I appreciate everyone for being here. Tom says give them the link for Sunday night. You can always go to dtitrader.com/live. I will put that in here for everyone, but I will also throw it on the Telegram tomorrow night when Adam reminds me to do that. Robert says he's from St. Louis. So am I, Robert. Originally, I moved down to Jacksonville about 3 years ago, and he says, go Lou Brock and Bob Gibson. Absolute legends. Love to hear a few Cardinals fans. And hey, it's not quite as painful to be a Cardinals fan right this second as we all thought it would be. So hopefully that continues. But I am in the office today, Omar, because that's where I accidentally left my fancy camera, and I thought I should be on a nice camera rather than, the optics are only ever so good when my face is in frame, but I thought I'd make them as good as possible at least. So yeah, I think that's it. Now we're just having fun, and I enjoy that. But thank you all for being here. I want to give you back your Saturday, and stay tuned to the Telegram. Stay tuned to my newsletter for other updates and things. And maybe if the market chaos continues, maybe we'll pop up a session midweek and get you guys some more value from these guys because I really loved what we had to share today. So appreciate you all for being a part of this. Go check out Jack's room. Let me drop that link one more time, and I will see all of you next time. Remember, April 15th is the next roundtable session, and you can stay tuned for more updates on that, but maybe we'll do a smaller thing even sooner. So thank you, everybody. Have a wonderful weekend. I hope the markets treat us well in the next week, but whether they do or don't, just keep your chin up, keep nimble, smaller trade sizes, protect yourself. And, there's always going to be a bull market somewhere. So